Hey there, Brad Castor from GreatOptionTradingStrategies.com. If you struggle to consistently find great put selling or covered call for income trades, if a lot of your trades seem to be getting into trouble, or if you've been lured into the groupthink that tells you have to arbitrarily sell options at strike prices with a certain delta and days to expiration, and everything should, statistically in any case, more or less work out, and then wondering why so many of your trades go wrong, this video is for you. Because in this video, I'm going to show you one of my favorite trade setups. Let's face it, trade entries are half the battle. Actually, for most option sellers who don't have a systematic trade repair process in place for the trades that inevitably go south on you, trade entries become 90% of the battle. Bottom line, trade entries matter. If you're not able to master these, your results are going to suffer. You're going to end up with too many trades in repair mode, or worse, you're going to end up booking losses, completely unnecessary and avoidable losses. As an option seller, you really have to have the mindset, the expectation that every trade should be profitable. And the more you're able to master the art of identifying great trade entries, the more profitable your trades become. And that's life-changing. The good news is it's not that hard, because I swear to you, the proficient retail option seller has so many advantages over everyone else in the stock market. It's just that you may not fully recognize what those advantages are or how to fully exploit them. If you're a retail trader, you have so much more flexibility and nimbleness versus the bloated institutional money. It may feel like David versus Goliath, because it is. But when David plays his game rather than trying to go toe-to-toe with Goliath, it's never David who's the underdog. It's Goliath every single time. And if you're an option seller instead of an option buyer, your job and pathway to success and profits are so much easier than option buyers. They have to be right, and right about three things, or else they're going to lose money. They have to successfully predict what a stock is going to do, and they have to be correct about direction, timing, and magnitude. But to be a successful option seller, all you have to do is be right about one thing, what a stock won't do within a certain time frame. And even then, the strategy is so flexible and forgiving. You can be wrong and you can renegotiate, restructure, and repair a trade so that you almost always still walk away with decent to good gains. But here's where it gets even better. Even in the option selling community, if you're willing to step away from the herd and trade based on principles versus rules, that's how you become better than everybody else. That's how you become a world-class option seller. Rules are designed to protect you when you don't understand how something actually works. In contrast, principles are recognized into 2 or 3 core truths about how and why something actually works. So when you understand the underlying principles of something, you have clarity and the powerful ability to make intelligent, informed choices. And there is so much groupthink and conformity and rules-based trading, even within the option selling community, that it's extremely easy to excel simply by committing to gaining greater and greater clarity. Now, that doesn't mean being vastly more knowledgeable about options than everyone else. Quite the opposite, in fact. It simply means being able to distinguish between the small handful of insights that are truly important and everything else that's just noise. So when it comes to finding a great put selling or covered call for income trade, instead of following some arbitrary rule based on selling at a specific delta level because someone backtested all this and found that statistically this produced better aggregate returns over an extended time period versus some other arbitrary and mechanical setup, just take a deep breath and think about the big picture. Here's the principle. When you see a stock that you don't believe will be trading lower or lower by much in the near term, sell puts or covered calls for income. That's it. Now, there are different ways to identify a stock that's unlikely to trade lower or lower by much in the near term, but one of my favorite put selling setups is to look for a stock to trade down to a key support level, test that level, and then bounce off it. That tells you where there are buyers willing to step in and support the stock. So you simply sell puts or trade buy right covered calls at that level or a little below it. All right, then let's walk through a recent real-world trade we did inside the Leveraged Investing Club where we use this exact setup and look at how everything played out. So this was a put selling trade on Pepsi we did back in January. And as I said, this was an official club trade and one I did a full write-up on for that week. And it really was an amazing put selling setup. As you can see in the chart, I identified a couple of solid technical support levels. The first one was right around the 136 share price level. That's the same area where the stock found support and bounced, and which also corresponded to a previous resistance level from the previous summer. There are also a couple of other technical indicators that we also incorporate into these setups. We also like to see a rising MACD histogram, which in this chart are those red bars at the bottom of the chart. And if we can get it, we also love an oversold RSI rating, which is anything at or below 30. And as you can see at the top of the chart, Pepsi had recently rebounded from a technically oversold RSI. Finally, I also drew in another likely support level around 132. So even if we were wrong and the stock reversed again and broke down below that 136 level, the next support level wasn't that much lower. And beyond the technicals, there were other reasons for the trade. Remember the underlying principle here. We're looking for stocks that are unlikely to trade lower or lower by much in the near term. So in this case, the valuation and especially the dividend yield were also at pretty attractive levels. So on January 12, 2026, with Pepsi trading at $139.85 a share, we sold to open Pepsi February 20, 2026 $135 puts for $2.15 a contract. After commissions and fees, on a single contract basis, I collected $213.88 in net premium for a respectable 14.83% annualized rate projected over the following 39 days until expiration. But check this out. After we entered the trade, Pepsi continued moving higher so that just 3 days later, with the stock trading at $145.89 a share and looking like it might be either taking a breather or stalling out, I decided to exit the position way ahead of schedule and ended up buying to close the position for 87 cents a contract. Now, it made sense technically if the stock really was stalling out. But because of the nice move higher and the implied volatility levels that were also declining, we were able to lock in around 60% of our max potential gains in just 3 days. And that exploded our final annualized returns. The original terms of the trade had been 14.83% annualized over a projected 39-day holding period. But the final annualized ROI was 114.24% over 3 days. Obviously, that was skewed by the abbreviated holding period, but looked at from another angle. That 87 cents a contract that I paid to exit the trade, or what I was essentially leaving on the table, that would have accrued at just 6.54% annualized over the following 36 days. So there you go. That's a bonus trade management principle. We didn't arbitrarily close the trade because we hit a predetermined profit percentage and our rule said that that's when we close the trade. We closed the trade because it made complete sense on that trade's own unique merits. We made an informed choice, not a mechanical decision. Here's a stock that performed very well for us in short order, but which now might be bumping up against resistance. And because we could lock in enough of the trade's max potential gains that what we left on the table simply wasn't worth the risk of sticking around for another 36 days to try to get it, exiting the position at that point really was a no-brainer. Look, I get it. Mechanical rules-based trading can be very appealing because it theoretically removes emotions from the process. And emotional trading is dangerous trading. You'll get no argument from me on that. But come on, you know what else removes emotions from the process? Clarity. Actually understanding the game you're playing. I swear, any area of your life that you absolutely own, you are not blindly following rules. You're not making mechanical, robotic decisions. You're making informed choice after informed choice after informed choice. Option selling is no different. It is so easy to do very well as an option seller. And to be honest, it's also very easy to become a world-class option seller because so many traders are trapped in this herd mindset. And it's not even their fault. Conversation for another day, but there are people and organizations who very much benefit from other people trading inefficiently and mechanically. Now, for most people, that may be fine, but it's never been something I've been cool with. If I'm going to do something, I'm going to learn to get good at it, which, as we've seen, simply means I'm going to understand how it works, or I'm not going to do it. So if any of this resonates with you and you want to take your trading to the next level, whether you're new to options, relatively new to options, or you've been trading long enough to know exactly what I'm talking about, I'd encourage you to make sure you're subscribed to the channel and definitely sign up for my daily option tips and insights newsletter. The newsletter and the channel really complement each other, and I'm able to send out the newsletter more frequently than I can post videos. And once or twice a month, I also try to share an actual club trade in real time with non-club member readers of the Daily Tips newsletter. There are links below to sign up directly for the newsletter, or you can also download any of the quality resources from the Great Option Trading Strategies downloadable library page and start receiving the Daily Tips newsletter automatically that way. Okay, until next time.